Just when you thought the situation in China couldn't get any worse, we've got this news. I am here to bring you what you need to know related to the biggest asset in the world. By many, it is, in fact, real estate in China being the $62 trillion behemoth that is unfolding as we speak. I've covered Evergrande, I've covered Shimao, I've covered all of these that can't pay back their debt. And as this unfolds, it is really reverberating throughout the financial system, starting in China. Now, I'm going to give you some details on the new developments. So let's begin right away. China's property crisis reaches the biggest builder, Country Garden. Now, they're actually bigger than Evergrande. Maybe they don't have as much debt. This was seen to be a sound company, and now suddenly it's affecting them as well. That's when you got a problem. When we go from subprime crisis to, oh my goodness, the entire financial system is unraveling, okay, then you've got a problem. I'm not saying it's the same thing. I'm not saying it's Lehman and all that, but I am suggesting to you that dominoes fall. Developer is the nation's largest by contracted sales. Some bonds plunged to record lows amid fundraising concerns. It's the same situation with all of these companies, okay? I read all these articles, I follow the stocks, and I'm looking at it. It's the same situation. One to the other to the other. They can't pay back their offshore creditors. They were doing some sort of scheme to bring money in. They were getting money from the aunts and uncles and cousins and brothers of the employees. Bring your money in, bring your money in. And then suddenly construction slowed down for a period because of what happened in 2020. And that immediately had a negative impact on these stocks. You look at also the fact that I'll show you in a second here, when one starts to fall, it exposes the problems in the other. There's this counterparty risk that is never discussed when everything is flowing, when you've got liquidity, when everything's all good. Hey, don't look there, don't worry about it. But then suddenly the rot is exposed. The crisis engulfing China's property sector is impacting its biggest developer. The shares and bonds are being hammered amid fears that a reportedly failed fundraising effort may be a harbinger of waning confidence. Country Garden is one of the few remaining large, better quality private developers that have been largely unscathed by the liquidity crunch, even as peers such as Shimao saw dramatic reversals in their credit ratings. Understand, this is not an Evergrande crisis. This is the entire sector, and it is the biggest in the world. $62 trillion asset. Huge. The firm is viewed as a bellwether for contagion risk, as unprecedented levels of stress in the offshore credit market threaten to drag good credits down with the bad. And that's the big thing. You've got bad companies out there. In any sector, there's always going to be some that are bad. But what about when the bad starts to have that contagion in the good? And then companies that are now affiliated, maybe as I'll show you in just a second here, banks that were lending to these companies that are starting to unravel, now we've got a problem in that company, and the dominoes start to fall. Okay, they talk about the fact that it employs 200,000 people, all of that. If you want to read about it, certainly do. I will cover updates here on the channel. So if you aren't already, hit that subscribe button, the thumbs up at least, because when you hit a thumbs up, it actually will be more likely to notify you. Property bonds slump on Logan debt concerns. Another company to add to the list. Here we go. Concerns about concealed debt at Logan Group fuel a heavy sell-off in Chinese dollar bonds, both investment grade and high yield. A key interest rate cut by China wasn't enough to stem a drop in property stocks. Traders calling for more policy support. We need more. We need more. We need to keep the liquidity going. But look at all central banks around the world. What are they doing? We'll talk about that more in a second. Hang in there. They're talking about the fact that this one particular company, their bonds are going down, but it's not just them. Okay, you can see here, China developer bonds from high grade to junk rated firms fall on Monday. No matter where you look, they're all seeing the same thing. So this is just for those who can't see on this chart here, cents on the dollar. So this is 100 cents on the dollar, and what happens? Instantly, practically, okay? This is the beginning of January. what happens? Just this sudden change, sudden reversal. Okay, I could show you some of these stocks right here. Let me pull this up. This is Evergrande. It's the one easy one to remember. I mean, if I pull that up over my head, I could show you right above here. I mean, isn't much to look at. The stock has just been punished over and over and over. And when it was at, okay, so it fell down to 2 and change, found its way to just over 3, a huge surge, okay, percentage-wise. I was talking about the stock saying, hey, look, it's been going down and down. During this period here, people were saying, oh, look, the stock is doing well. Everything is going to be great. But was it? It's at 163 at the time of this recording. The stock is not going to just turn around like that. Sure, you can catch a falling knife, as they say, if you desire to do so. Then we get into this. I mean, like I said, just when you thought it couldn't get worse, look at this. World's worst performing bank lent billions to China's Evergrande. This is what I'm talking about. It's not Evergrande. It's not just the property sector. It gets deeper and deeper. Minsheng shares have led losses in the Bloomberg World Bank's index. Bank is among the largest creditors to China's Evergrande. People have asked me, who did Evergrande do business with? Who is affected by it? This is one of those. The banking sector is highly vulnerable to what happens right here with real estate, and among other things. It was once hailed as the future of Chinese banking, a privately run lender that would mint money, outmaneuvering its state-owned rivals. An ill-fated push into property lending has instead turned China's Minsheng banking into one of the biggest casualties of the real estate debt crisis that's roiling Asia's largest economy. Just unbelievable, tumbling 31% in the 12 months through last week. The worst performance of the 155-member Bloomberg World Bank Index. You could see that right there. Now, the bank index is probably going to do very well, right? You see interest rates rise, but not this one particular stock, okay? So here you can put, like I always do, I leave the articles there for you. You can pause the video as some people do, or you can go down in the description under the sources. Now, some would argue it's because they're not controlled by the state. I think they're all controlled by the state personally, but that's just the way I look at this. The point here, all I'm trying to highlight here is that one by one by one, okay? And then this is just getting into the fact that the China Central Bank cut interest rates on Monday. They're trying to do this at the same time all the other central banks are increasing their interest rates. So what's this all about? Clearly they are going in a different direction. When 2020 hit, it was funny because China actually was tightening up, and now they're doing the opposite. So it's unusual to say the least. And then I wanted to leave you with this here. Asian batteries power the global EV fleet. Worldwide market share of the biggest electric vehicle battery makers in 2021. In yellow, that's China. So 32.5% as well as 6.9%. And all I'm trying to highlight here is the fact that they control the market in many cases. Whether it's the rare earths, and whether you look at this, the EVs, now a lot of that is actually for the Chinese market. But the point is, the reason I mention it, we haven't weaned off of China. The world hasn't weaned off in any way. And that's not just electric vehicles, batteries, and, little trinkets and gadgets. It's the financial sector as well. It's real estate. It's everything else. The world has become completely intertwined and interconnected, whether we like it or not. A problem going on in China will impact the rest of the world. Maybe not as bad as it would impact China, but certainly has a huge effect. And that's all I wanted to say. So be aware of this, keep an eye on it. On this channel, I'm going to continue to show you the facts, not the bias and the political garbage and all that stuff. The facts, the information, and you could do what you want with it. If you appreciate the information, all I ask is that you hit that thumbs up button. It's right down there on the way out. At the same time, by hitting the thumbs up, you're basically notifying a bunch of other people out there, this algorithm, to let them know this is good stuff. So I do appreciate that, and I'll see you on the next one.